Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities space. My name is Jesse Day. As always, standard disclaimer, nothing here is investment advice. Do your own due diligence. We bring you the information. You do the research. Today's guest is the founder and publisher of the Gold, Goats, and Guns newsletter and podcast, where he attempts to connect the false narratives of geopolitics to viable long-term investment theses. It's somebody that I always love talking to, Mr. Tom Luongo. Welcome back to the show.
Thanks, Jesse. How are you? How you been?
Doing great, thank you. In Slovenia at the moment, having some spotty internet issues, so hopefully this interview goes well. I'm very upset with my Airbnb, but what can you do?
You sound like me. Like I get to look to my left and see if there are clouds coming over the horizon, whether Elon Musk is going to be able to give us trons or not. So we'll find out.
Well, there you go. I want to start because this is a commodities focused podcast, and we're going to get into all sorts of crazy stuff, of course, because I've got you on the show. But I'm wondering, when looking across at the moment, when looking across the commodity space, obviously we have gold at nominal all-time highs, holding strong around 2,500. We've got the uranium sector, which is interesting. Equities have been beaten down. Silver sentiment is in the basement. The mining sector in general, sentiment is in the basement. I'm wondering if you're seeing any value there. Is this a sign that, wow, this is a great entry point, as a lot of my guests say? Or is this maybe a cautionary tale that it's time to take a step back and maybe sit on the sidelines to see how things play out? What are your thoughts?
Well, let's start with the beginning. Like, what's the cure for low commodity prices? Low commodity prices, right? And it's just that nothing changes about that because of the way the investment cycle runs and how commodity producers have to operate, and their cogs and they're just the way they have to hedge energy costs and all the rest of it. When we have a situation today where we have energy costs are relatively low, I would argue too low to be sustained in this environment. But if you look at across the space, I don't care if you're looking at grains or you're looking at energy or you're looking at metals or I don't care, lumber, timber, for example, they're all down. They're all back down towards levels that were all like pre-COVID ceilings, right? So you had things like oats were always a sell at $3 a bushel, right? Now, after oats hit $7 a bushel, now they're back down to $3. What used to be the ceiling is now the floor. And we see that across the entire space. Wheat, corn, oats, rice. The only one that hasn't quite gotten there is soybeans. They're still falling back towards the lower that lower bound. You see the same thing in copper. Copper used to be a sell at $4. Now $4 is the floor. Tin, aluminum, lead, doesn't matter. Go look across the entire space and you see the same kind of chart patterns. They're not all that way. Some of them are a little different, but for the most part, that's the thing. So as a contrarian investor, you say to yourself, well, if these are the new floors, now the question is, what's your risk to reward ratios? Are they the new floors or are we going to go lower? In the case of like U.S. natural gas, there is no floor. It goes up to 11. It goes back down to 1.5. It goes back to 2. It's like it's all over the place, right? But natural gas production at the margin in the U.S. is, a function of oil production, and the gas is just a byproduct. Similar in the way that silver production for a long time was a byproduct of gold production or copper production or something else, and then all these credits would just be thrown out by miners. And the silver was just thrown in for giggles. Some of the production that's happening, as I've talked to people like Vince Lanci and others about, they've reminded me that you have a lot of off exchange buying that's going on in these metals, certainly at this point, certainly silver, where, for example, China's going in and doing offtake of doré before it ever gets refined into bars and then sold on the COMEX of the LBMA. The demand for the metal itself is so high that maybe the futures price isn't a particularly good indicator of where the market actually is. So what I would say is really simple. I am a proponent of the idea that we are on the cusp of another major commodity bull super cycle. We're just waiting for it to kick off. And I think that the main reason that we should wait for the kickoff is simply politics. As always, there are a lot of people out there who don't want to see a commodity super cycle at this point because they're trying to fudge the inflation numbers in order to push certain people into power or keep certain people in power. It depends if you're talking Europe or the United States. So, the game right now is inflation. They printed a lot of money after COVID. It uncorked an unbelievable amount of commodity cost push inflation because they screwed with supply chains. They screwed with delivery mechanisms. They screwed with the midstream of all these markets, right? And, it caused a lot of inflation. And then there was more money chasing fewer goods, and we had massive commodity inflation. That was a pump and dump, right? In effect. We're at the dump portion of it now. The dump is over. Now the markets are coming back into somewhat supply and demand balance. But, I saw something this morning, for example, that copper production is still continuing to trend lower and copper demand continues to trend higher. So there's a lot of ways to skin this cat. But in general, I'm a commodity bull. I do two newsletters, one for my own newsletter and one for Newsmax, and both of them are, they're both commodity focused still at this point in the process, and I don't think that's going to change. I mean, to give you an idea, in Ultimate Wealth Report, one of the portfolios is called the Commodities portfolio. I mean, to give you an idea of where we are, and lion's share of the number of stocks weighted towards that those things. Now, because of that, there's no way around this. Like, they're going to print money at some point. Someone is going to print money. I don't know if it's going to be the Fed or it's going to be the ECB. Or Mario Draghi came out yesterday and said, "Hey, we need to print trillions of dollars in order to recapitalize Europe, but we need to do it under the rubric of the European Commission, not these individual countries." What a shock! He's a globalist. He destroyed the European economy. He destroyed the euro's potential to replace the dollar as a global reserve currency, or at least as a regional reserve currency. And what a shock, he's out there, right on time, talking his globalist playbook. Now, we can talk about why that is and all the rest of it, but the reality is that money's going to flow because it has to, because the credit system is collapsing. So they're going to start trying to reflate the credit deflation. They're going to try and reinflate that. I don't think they're going to be successful. I think what they're going to do is they're going to destroy people's confidence that these people have any idea what in the hell they're doing, and therefore it's going to get even worse. And then that feeds back into gold prices. It feeds back into currency crosses and everything else. So there's a lot of different ways to skin this, and I haven't even touched on what's going on with Japan and currency unwinds and a variety of other things and shifts in monetary policy and whatnot. So, but in the short term, the TLDR, yeah, I believe that this is going to be a major commodity pull. I just don't know when it's going to start. I'll say after the election. Is that going to mean it's going to start in November, December, January, April? I don't know. But, watch the charts, wait for the breakouts. The breakouts will be very clear. Wait for a good, solid first weekly and then monthly closing, impulses to the upside. And there will be a major policy event that will also, start that trigger as well. And investors understand what to do. So that's what I'm seeing. I'm seeing accumulation in a lot of these. In these major, certainly in the major like industrial metals producers. I mean, I'm seeing, there's accumulation happening in there. So,
hey guys, just a quick break to hear from today's sponsor, ARC Silver Gold Osmium.
They offer personalized service and competitive prices with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the comments left on this YouTube channel about ARC SGO and owner Ian Everard. Have bought from ARC, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy precious metals, I recommend Ian at ARC Silver. He is a straight shooter. So go to arcsgo.com and contact Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com. And make sure to tell him that Commodity Culture sent you.
And when it comes to gold specifically, just honing in on that and the gold mining sector, I've spoken to a lot of people now. Recently did a podcast with Adam Rosenzweig and Lee Gehring. There's been a lot of other people who've echoed the sentiment that the valuation gap between gold itself and the gold miners is like at historically undervalued levels when it comes to the mining sector. When it comes to Lee Gehring and Adam, they were actually referring to the major producers. They weren't even talking about your junior mining cos and your explorers and developers. Are you seeing that valuation gap as well? And do you expect it to close perhaps after the election, as you said?
I don't know that the valuation gap's going to close, because a lot of people, you have to remind everybody that, I mean, some of the better people in the space, people that I respect, are all saying the same thing, which is that, come on, like, mining companies are terrible at managing their own business. So, it's almost like they hate themselves. You know what I mean? Like, oh, they hate their own business, and so they run their companies badly. I'm not like getting conspiratorial here or anything. I just think that there's a lot of gold companies are run by geologists, and it doesn't mean that they're necessarily good MBAs, right? You know what I mean? Or and so, and there's always that gap. They always overpay during a bull market for new properties, and then they always overcut production during a bear market. They never, they're always like on the wrong side of the trade. And so there's going to be a moment during every gold bull market where the gold price is rising, where there's going to be a catch-up phase. And then and then the miners are going to roll over first during the mania phase, or gold will roll over, the miners will still continue to roll, but then the crash afterwards is going to be epic. So you have to be very careful and very nimble, right, in dealing with mining companies. It's just the way it is. What I would say is, let's watch gold here. $2,500 is clearly right now a desire to cap gold below the 2550 area. It's there. It's hard to argue with it. Like, we had all this momentum in gold, and then all of a sudden, like, volatility just stopped dead cold, right? We're trading at a $30 to $40 band now for a month. Is that normal in gold? No, it's not at all. We're back, or are we back to kind of normal levels of volatility in gold? Well, yeah, but not as a percentage of price. Like, it's still low, because now we're talking about a $2,500 regime as opposed to a $1,500 to $1,800 regime, and say moving $45 range on a weekly basis. Yeah, gold is actually one of the least volatile assets and major assets in the market right now. I don't like, I use volatility differently. I talk volatility differently than most people. I just talk about the range versus the price versus the time frame. So if you're looking at like a weekly range, the price of gold, for example, and I generally hold on to like 5 years worth of data. So I do a 5-year rolling average, so 254 weeks worth of gold data. Gold moves like $42 a week, low to high. Well, relative to a $2,500 gold price, that's less than 2%, right? Whereas silver is like 4.5%, and oil is now 7%, or 6 to 7%. Right, and the lower, and clearly the lower the price goes, and so those numbers move around. But relatively speaking, just in general, oil volatility has tripled, gold volatility has fallen off, relative as a piece of relative as a function of price. And so, what is that telling you? There's two things. Well, one, with gold now being a tier 1 capital asset, there's a whole lot of people who don't want gold to be a volatile asset anymore. And, we in the gold community are so used to, have been so imprinted with central banks fighting the price of gold, that a lot of people are still in that mindset that, the central banks will come in and bomb the price of gold. Mr. Slammy will come in and everything else. And while that's cute, and, I know the people, like, I'm friends with the people who like make these. I had Eric Young on my podcast. He coined the phrase Mr. Slammy. Like, I get it, right? It's fun. It's good Twitter bait. It is what it is. But is it real? Or is it just, look, at times people are just running an arb play on gold versus silver, or they're all doing their thing. Are the central banks fighting a higher gold price? No. Are they fighting a runaway gold price? Yes. So expect grinding higher. $200 up, $100 down. $200 up, $100 down. $300 up, $150 down. Like, that's what you're going to see going forward until they lose control of the market. But that will be during some other exogenous event, a sovereign debt crisis, a major stock collapse, something else has to trigger a dislocation in the gold market. So in general, yeah, I think I know we're in a gold bull market. As far as I'm concerned, gold is the only one-way trade really in the market right now. It's criminally underpriced relative to the size of central bank balance sheets, relative to the size of M2 money supplies, or whatever metric you want to use. And we've got too much leverage in the system. We've got too few real assets undergirding as collateral for the financial assets that are out there. Something's got to change. Either the financial assets have to collapse by 90% or the gold price has to rise. Now, I'm not talking about in the next week, 2 weeks, month, or year. I'm talking about structurally over time, like over a decade, what's going to happen. And so, and then how the mining companies, if they were actually sophisticated, if they were sophisticated in their understanding of their own market for their own product, they would actually run their companies differently. Until we actually see evidence that they do run their companies differently, as investors, you have to be very careful in how whether you play the monetary, the metal itself, or the miners. It's not just a one-to-one correlation. Oil companies know how to run their companies. Like, I have no problem buying oil companies when Brent's in a bull market, and hell, I like oil companies even when Brent's in a bear market. Has anybody looked at the price of Shell recently, for example? Like, it's trading near an all-time high, and oil's in the dumps, and natural gas, and but LNG prices are good, right? So it's like everything else. Some people are good CEOs, some people are bad CEOs. At the end of the day, personnel is policy, and I always go back to a conversation about this very point I had with my friend and partner Dexter White ages ago. Like I was chatting with him. I don't know. I remember this conversation. I bring it up to him every once in a while. I remind him about this when we're talking privately. And I said, about 12 years ago, maybe 2011, I think, Microsoft broke out of a long-term base and started pushing higher. And I said, Microsoft's looking very interesting. And he just stopped me dead cold and said, I won't put $1 into Microsoft until Steve Ballmer is no longer the CEO. He's the worst CEO in the history of humanity, at least as of that point. He may get usurped by other people, but as of then, he was a man in charge of destroying more shareholder value than any other CEO in history, and therefore he doesn't deserve my investor capital, period, no matter what the price is doing of the stock. Now I was correct. That was literally the beginning of a massive bull run in Microsoft, but they also got rid of Steve Ballmer soon after that. And so, and I caution people about gold companies. It's the same kind of thing. You really have to know who's running the company and whether they have a head on their shoulders or not, and who they may or may not work for. And we've seen that before, where they get preyed on by the banks. They don't care about the financing problems that go along with the Vince Lansky and I did an entire podcast talking about gold financing and the problems within it in the industry. And Vince knocked it out of the park. And I absolutely recommend people listen to that podcast, not for me, but for Vince, because Vince is a badass. So I guess that's the long answer is it all depends on the company, as always.
Yeah, no, I love the nuance in that answer. Excellent. I want to circle back to Draghi coming out and declaring they need to fire up the printing press some outrageous amount. I don't remember the specifics. You're obviously more informed on this than I am. What is going on there? Is the EU in dire straits at this point? What's happening?
Yes, but nothing has changed. They keep getting effectively bailed out by Janet Yellen at Treasury. Draghi's always brought out, because he still has a reputation as being the best central banker ever. I remember Jim Rickards always saying this. Mario Draghi is the best central banker in the world. He says little and does less, right? I remember Jim saying that for a decade during the old ZERP and NERP years. And Jim wasn't wrong, right, at all about that. But that reputation is a little unearned, because he also had the Fed covering his tracks the entire time. So what I would say is, when they can't sell this through Christine Lagarde, no one thinks Christine Lagarde is, competent. She's a manager, and her job is to manage the financial repression of the European Union in order to ensure that they get fiscal and monetary integration. And they want to get rid of the member central banks and roll everything into the ECB, and then give the EU Commission tax and spend authority, which they've been trying to do for years now. Problem with that, of course, is that, well, the EU is a terrible political structure, but every day they try to enforce this idea that, you know, we're more powerful than the member states, their governments. We punish them if they ever get out of line. It's always why they go after Hungary and or Poland or anybody who says no to any EU diktat. This is simply that's a dog whistle to the bondholders that they're trying to seduce into selling trillions of dollars worth of, you know, bonds to fund climate change or build a new EU military industrial complex or whatever it is. And that's basically what Draghi was talking about. And so they brought Draghi out to try and reassure bondholders, because they're clearly not getting the kind of uptake that they thought that they would get. They floated the idea of war bonds either early this year or late last year to fund Ukraine. That went over like a lead zeppelin, right? And I called that immediately. I went back to when they issued the original post-COVID bonds, those first $200 billion tranche of COVID bonds called the SURE bonds, and just showed everybody, like, these things don't trade. They're trading at 50 cents on the dollar. All the original investors got their heads handed to them, and everybody's, you know, once bitten, twice shy. And so how are they going to pull this off? I don't know that they can. And they certainly aren't going to be able to do it at 1 or 2 or 3%, which is what they want to do. They want to sell these things at 1%. They're not going to sell them at 1%. Who the hell is going to buy until the European Commission has the kind of taxing authority that the federal government of the United States has? Ain't no way they're going to be able to sell that amount of sovereign debt. And they've got to collapse all the member central banks. And they've got to, you know, get the people of Europe to agree to all this. And there's so many things they've got to do to get this done. And they want to sell what? $800 billion worth of these things a year? Into what market? I know they're going to try. And I know they're going to try and create I know that there's going to be some kind of crisis on the horizon where they're prepping the ground for this. But in some ways you can only, you know, I think about it now, it just pops in my head when I think about this. Well, it's clearly what they're thinking is that, well, we're going to destroy the U.S. and Western capital is going to have no other place to go but the soon-to-be eternal European Union. That's nice. Like, that's nice. Germany, by the way, is now closing its borders. Are you going to fine them $20 million a day or $200 million a day like you're doing to Hungary for not doing the same thing? What are you going to do to Italy? Italy's closing its borders as well. And are you threatening Giorgia Meloni with fire and brimstone? So it just feels like they have. I use this metaphor all the time. They have their little Microsoft Project Gantt chart over at Evil Corp Central or the Davos crowd or whatever you want to call it, and they just keep running the Gantt chart. Oh, on this date, 60 days out from the election, we're doing this. And then because Basel III is coming in on this date and this is going to happen then. So now we have to do this now. And it's just what it feels like. And these people aren't particularly good at playing jazz. Like, they're not good improvisers. So, you know what, it's like, okay, so you guys figured out what a 2-5-1 is, but, you know, you don't know how to solo over it. And you know what I mean? Like, I used to be a musician. Like, I used to be a good one. I'm not anymore, but I understand that stuff. I understand this stuff well enough to know, like, okay, fine. You know what a 2-5-1 is. That doesn't mean you can play jazz. Like, I know what a 2-5-1 is, and I can't play jazz. Like, you know, you want to, rewrite a Rush tune as a 2-5-1? I'm there. Like, I can play that, but I can't play. I can't just, pick that up and do on the fly substitutions and improvise over that. And these people need to be improvising, and they need to be able to get where they need to go by improvising to get there. And they can't do it. They're not capable of it. Like, I used that metaphor yesterday when I was Sean Newman and Alex Craner, and somebody posted up on Twitter today. He said, by the way, where did electro dance music come from? Germany. Where did jazz come from? The deep south of the United States. You know what I mean? So it's a cultural thing. It's a So yeah, I don't see that. I, it's funny. They're going to try everything imaginable to survive because that's what people with power do. That doesn't mean they're going to survive. What it means is they're going to draw this thing out for as long as possible and make us as miserable as possible for as long as possible. That's what's going to happen. And that's going to get really, really tiresome. It already is tiresome for those of us who can see them. The problem is I don't know that we have critical mass of people that see them yet. You can see it bits and pieces and pockets of it, like the results in Saxony and Thuringia in East Germany. They get it. There are pockets of the United States that get it. There are pockets of the UK that get it. But, the political systems that are in place, the rules that are in place are still, very much in the favor of the of these globalist retards, for lack of a better term. And until they leave the scene, or until they're forced to leave the scene. I mean, look at what Macron did. He comes in third in the election twice, and somehow he still is able to install uber globalist Michel Barnier as the Brexit negotiator, the failed Brexit negotiator, as the prime minister. It's an insult in every way, manner, shape, and form. But these people don't care. So, what they're going to do, react accordingly.
Well, you mentioned Alex Craner, which is interesting because I had him on the show recently, and he described a very interesting theory on the UK being over their skis when it comes to their commitment to supporting Ukraine and the potential ramifications for them. I know you discussed that as well with him on your podcast. How do you view that situation? How do you think that's all going to play out?
I think Alex has figured it out. Now I'm in the process of watching credit spreads to get an idea of when it's going to pop off. All the signs are there. They're getting ready for some ugly event. And I don't know if, I always target the first week of October because it's the first week of Q4. And at the beginning of every quarter, we always get a shift in everybody's investment portfolio and investment strategies, right? Certainly Q4 is important. Q4 and Q1 are more important than Q2 and Q3. Why? Q4, people have got to set up for tax loss selling and how they're going to write their books at the end of the year and blah, 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 blah. And then Q1 is when they say, well, 2024 is in the books. Now what are we doing for 2025? So they prep their strategy for the next year during Q4, and then they run their strategy and just adjust it during Q2 and Q3. So the first week of October is always that moment where everybody's doing the same thing, right? But they let it run run to the end of the quarter so that they can write their bonuses and file their quarterly reports and blah, 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 blah. So, so everybody kind of stays on autopilot until the end of the quarter. And then the first week of October, boom, that if there's going to be a confluence of influences and a confluence of incentives for something drastic to change, it always seems to happen on the first week of Q4. Now, of course, since everybody can read a calendar like I can read a calendar, guess what? If you've got the Gantt chart at Evil Corp Central, then you're going to target that week to then put your thumb on the scale to get what you want as well. So it's not a hard prediction to make that something bad is going to happen leading up to that. But going back to the UK, UK-US bond spreads, or what you should be watching. I've been watching US-German bond spreads for 3 years now. But a couple months ago, I went ahead and I pulled up a chart of, a weekly chart of the US-UK bond spreads over the last 3 years, and then started looking at all the turning points and said, well, what happened that week? And 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 then you just write those in, and then you get a pattern that emerges and goes, oh, look, every time something bad happens or the policy happens, the spread blows out. Well, apparently, there's a real problem in the structure of the market, the bond markets, if the UK 10-year gilt is trading 60 basis points above the American 10-year, right? So gilts, 10-year gilt trading at 4.5, US 10-year trading at 3.9. That seems to be a signal, a moment where either something bad is happening, or someone is coming in to put the kibosh on that to make sure that something bad doesn't happen. The UK gilt crisis of 2022, one of those moments. There was another one last year where Janet Yellen started doing, I think it was when that happened, Yellen immediately started buying the US long end of the US yield curve and started doing Treasury QE, right? Treasury yield curve control. So what I tell you is that they crush it back down so it's negatives. The gilts are trading below the US, and then it starts to creep up again. It's creeping up now. It's 22 basis points today. Last week it was 15. They were trying to hold it below 15. They kept painting the tape on the Friday afternoon to print 15 basis points. Why? Because someone can't go into a weekend with it printing at 20 because clearly somebody important would get a margin call over that weekend and then bad stuff would happen on Monday, right? So even though everybody knows, like, you need to fix your shit, like, this is bad. And yet the market keeps saying, sorry, calling your bluff. Nope, sorry, we're selling gilts, or we're buying gilts slower than we're buying American debt in this bond. And as everybody moves into bonds at this moment in time, because everybody's anticipating the Federal Reserve is going to cut by 50 basis points. Well, what if he only cuts by 25? What is that? The markets are priced for 50. Hell, and in some ways they're priced for 75. The Fed never cuts 75 basis points unless there's a crisis. Now, do you expect a crisis in the next week? Unless one can be engineered. So for markets, not saying that there's a crisis. The short term of the U.S. Treasury market just looks like everybody's anticipating Powell cutting rates, and they're front running the trade. I don't see stress. I mean, I see headlines that are bad in the commercial real estate market. I see there are problems. I'm not saying there aren't problems. I'm saying, is it indicative of the moment before a major credit event? Do I see somebody dumping $50 million into the U.S. CDS market or whatever in order to try and create a thing? Because that's usually what happens. Like, somebody will use the credit default swap market to try and write a headline to create a problem, right? That's the way it works. Never ever think that these are free market. Those kinds of markets are not free market. They're not at all. Okay. They're absolutely, their operations no different than ground operations that Ukraine is doing in Ukraine, or Russia's doing in Russia right now, or Russia's doing in the Donbass. These are operations, and they're used to move markets in a particular direction, create panic, and then try and get the result that they want. They did this in gold. They do this in every market. Every once in a while, you get an absolute serendipitous event where no one was informed. And that was when the Japanese intervened in the yen market on August 5th, and we watched everybody had to overnight become an expert in Japanese carry trades, right? All of a sudden, everybody was now a newly minted expert in Japanese carry trades, right? Just like, we were all newly minted virologists during COVID and everything else. But that's all cover. The Bank of Japan didn't inform anybody of what they were doing because the panic was real that day. That wasn't ginned up. That was real. Because that really burned a lot of people, and it caused a lot of responses. It's like the old joke by Robin Williams about Reagan being an animatronic. It's like, oh, you moved him too far. Move him back over here. It's the same. They were panicking. It was a real panic, and it's rare that I see that anymore. So I guess I'm rambling around a little bit, but I say, look, we have so many potential trigger points for something bad to happen in the next couple of weeks or next month or so. Certainly as we come into the election, and we're doing this a couple of hours before Kamala Harris and Donald Trump are going to take the stage and have a debate, and that's going to be hilarious. So, like, you can see it all just kind of like something's going to give here, right? And someone's going to try and make it work for them. And I don't know. But will it change it will change the course of history? That's a good question. And why would they want to do that? So, for example, why would Davos or why would Evil Corp Central want to crash the markets? Well, it's clearly to get the Fed to cut interest rates even more, to get an emergency rate cut. If he only goes 25 and the markets are mispriced, the bond markets are all mispriced by 50 basis points, and they have to correct sharply because they're all perfectly priced for 50 or 75 basis points, and they don't get it. Someone is going to have to now scramble. So then do you activate some landmine or some financial attack nuke that's lying in wait for this to happen? Do they have their plans? Of course they do. You have to assume that that's the way these things work. There's trillions of dollars at stake. You think they're not going to have like fallback plans in place? Like I say these people aren't good at jazz, but they are good at writing flowcharts. They're very good at writing flowcharts. If this, then this. Well, if this, then that. Well, if it goes badly our way 3 times in a row, what do we have in place for that one? Well, what do we have in place for this? What do we have in place for that? But, what if somebody does something that's 3 sigmas off the board? Well, they don't have a plan for that. But there are too many signals out there from the WHO, from the WEF, from this one and that one, that they're planning something big to affect the outcome of the election and to try and move Powell off of his current stance. So we'll see what happens. We got a week until the FOMC meeting. I'm hoping that Powell only cuts 25 basis points and forces everybody's hand. I'm not saying that it's going to change the world, but it is going to force an outcome. And it's going to force responses that'll be interesting and will definitely not serve Evil Corp Central's, the Legion of Doom, whatever you want to call them. Pick a number, pick a metaphor. It's not going to serve their interests. It's not at all. But they're prepared for it. But I don't know that they're fully prepared for it, like everything else, because a lot of what they think is out there is unknowable. They don't know what the hell has been created any more than I do, and that's the interesting part about all of that as well. So, long-winded answer to say, watch Japan, watch UK gilts, watch the credit spread between US and UK breaking up towards 60 basis points. Because if that breaks, we can have a runaway seizure in the gilt market, and then what? I don't know. Well, I mean, I do know, but it's not good for the UK. It's not good for Keir Starmer. And a lot of money is going to flow back into the United States as Europe starts the process of unwinding the massive liabilities they have. And what happens if, I don't expect the Russians to mobilize 200,000 troops and blow the Donbass wide open and go into broken field running. I don't expect them to do that. I don't think they need to do that. They're taking territory left and right now without having to do that. So, why would they change what they're doing?
Yeah, interesting thoughts. By the way, how does somebody named Keir Starmer that get elected? That just sounds like a supervillain name. That's like Darth Vader or something like that. I mean, the guy is a caricature of some evil movie villain. Now, you mentioned
he really is.
He is. You mentioned Germany. What's going on there with some of their election results? If you listen to the mainstream press, Germany has been rocked by far-right extremists winning elections, and apparently it's a huge danger to democracy over there. So you wrote a blog on this very topic. Break it down for us. What's really going on in Germany right now?
Oh, God, this is a very complicated thing. So, hold on. All right, let's start with the basics. The German political system is terrible. It really is. It's really dumb. I can only say that whoever put that constitution together, and it was us, right? Really hates Germans. Like, they really do. Okay, so let's start with the basics. What people don't understand is that the state government elections in Germany, so Thuringia, Saxony, Brandenburg, equivalent to, Kentucky, Tennessee, whatever, right? But the way they do things is they have little mini elections just like they have at the national level. So Germany goes to the polls and elects a new Bundestag, which is the equivalent of their lower house. They hold an election across the entire country, and people are and the parties are given out seats on a proportional representation basis based on the amount of votes that they got, and those are doled out. Some of them are not necessarily. I don't remember if any of them are handed out individually, but generally in general, you got 30% of the vote, you're going to get somewhere close to 30% of the seats. And then they have to form a coalition government at the national level where they can cobble together 51% of those seats and form a government around that. And if they can do that. Now, AfD, the Alternative for Germany, they're the new far right because they're slightly to the left of, they're slightly to the right of, I don't know, Karl Marx, right? And I kid when I say that, but at this point, everybody slightly to the left of Karl Marx is a right-wing Nazi in modern, certainly European media parlance. Now, they did very well in the former East Germany, Saxony, Thuringia. They're going to probably do very well in Brandenburg as well. And Brandenburg is what surrounds Berlin. Berlin's a separate district. Each state, it's not about the German lower house that matters, because now they do the same thing at the state level. You take the results, they form a coalition government based on the results, and then you're always looking to see how they can get 51% to cobble together a state government. You look at the election results, it was, it doesn't matter if AfD got 38% or 45%. If the other 55% band together and with not necessarily in Germany, but generally speaking, you see this in Spain, for example, that they can get the other 55% together to form a coalition, even though they don't like each other, even though they all hate each other, but they're just going to block out the one party. If they can't get an outright majority, you can deny them a seat at the table. Why is this important? It's important because in the German upper house, the Bundesrat is organized by state. And so every state gets a certain number of votes in the Bundesrat based on their population. In the case of these three states, they each get 4 votes. Okay, 69 currently 69 seats in the Bundesrat, but they all vote as a block. Okay, so if you cobble together a coalition between the equivalent of the Republicans, the Democrats, and they don't have 50%, then they grab the Greens to make up their 51%. Well, the Greens now control those 4 votes because they can always just hold their nose and veto, whatever comes out of the Bundestag. They can veto any legislation because they control all those 4 votes because they don't have to listen to their coalition partners. They can't be browbeaten into submission, right? So when you look at the Bundesrat, you're always looking at which parties have greater than 50 control that by this on a state-by-state basis, more than 50% of the votes. And right now, there are 3 of them. The CDU, the SPD, the CDU, nominally the Republicans, the SPD, nominally the Democrats, and the Greens. And that was all organized by Angela Merkel over the last 20 years to get the Greens as minor party in a blocking veto position. And they control 44 out of 69 votes in the Bundesrat. Well, if you can get them down below 35 votes, the Greens lose their veto. There are 12 seats up for sale. 44 minus 12 is 32. 44 minus 8 is 36. Ooh, the Greens still have their veto. So the Greens are what's important here. Getting rid of the Greens from the German upper house frees up the German electoral system. They didn't. Now, in order to qualify for government in Germany, you got to get 5% of the vote. To even qualify to be a party, get a seat at the table. You don't get, if you get below 5%, then any seats you would have earned go proportionally to the other parties. And everybody below 5% threshold doesn't get a seat. They get 0. You either get 0 or you get enough to cover 5%. So in Thuringia, they got 4%. Greens are out. Those 4 votes out of the Bundesrat, gone. Now we're down to 38 votes. Saxony, the Greens got 5.1%. In Saxony, I think it's Saxony, or it's the other way around. I don't have the numbers in front of me. It's been a couple of weeks, so forgive me if I get this backwards. What matters is we're trying to get the Greens out of all 3 of these states in order to get rid of their veto, which would then free up both the CDU and the SPD to start acting in Germany's best interest again. And it looks to me that that's what's going to happen because Die Linke is the left party. That's what Die Linke means. They are the inheritors of the old East German Communist Party. They split this time. And Die Linke is very strong in this area of Germany. They're not very strong anywhere else. So Die Linke split, and half of them basically went and followed what is now known as BSW, which is Sarah Wagenknecht's party. It's literally named after her, right? And she's a communist, but she's also a populist. She is a German nationalist of a leftist variety, as was AfD, which is a German nationalist party of the nominally right wing, right? Forget the fact that, fascism is a left-wing ideology. Let's not even talk about that this is not the new rise of Hitler or anything along those lines. So remember, National Socialism. Say what you want about National Socialism, dude, but at least it's an ethos. So to quote the Big Lebowski. So now, I don't know how Wagenknecht is going to handle this, but I think she was brought into the race to split Die Linke and get the ability to freeze the Greens out. And if that's the case, AfD is not going to be in the coalition government, certainly because of the way the vote came in. If they had gotten a few percent higher, they would have had the ability to block a whole bunch of things. And the firewall around any of the other parties forming a government with them would have to fall apart. But didn't quite happen. So it was really close. So you weren't going to get like the trifecta of goodness. You're going to probably get rid of the Greens, depending on how Brandenburg goes. If the Greens fall below 5% in Brandenburg, they're going to be out. They're going to lose their veto. And that's going to change things at the national level. It's going to depower people like Annalena Baerbock, the foreign minister, who's a Green. Robert Habeck, who is the vice chancellor, who's also a Green and is really running the freaking country, not Olaf Scholz. Okay? So, and the SPD got wiped out in these elections. And, the CDU is no great shakes. Both the CDU and the SPD are just like the American version. They're American analogs. They are globalist parties controlled by foreign money and foreign actors. They don't necessarily work for Germany, but they're also now staring at leadership vacuums, political wipeout, embarrassment, and all the rest of it. And while I don't expect them to walk away from and do the right thing, we're closer to them being forced into doing the right thing than we have ever seen in the last 15 years in Germany, if not 70 years in Germany. And so that is a very interesting thing. I want everybody to note something. Despite all the histrionics about AfD, the new rise of the Nazi Party in East Germany, and by the way, they're doing very well in places like Bavaria, where, all the major companies are. That's where BASF and Volkswagen and BMW and Siemens, they're all in Bavaria. And guess what? No one's upset about that. Go look at the bond market. These results were actually cheered by the bond markets, by the stock markets. The German DAX is one of the few, there's still a safe haven trade vis-a-vis Germany. I mean, if this was such a catastrophic result, I would have thought, if the headlines were correct, then the German Bunds would be getting sold and, oh my God. But no one's doing that. And two reasons. One, because AfD really isn't that bad for Germany. One. And two, these election results were just encouraging enough for the globalists to maintain the status quo. So ultimately, nothing is really happening. But we're still very, very close to the potential for like weird stuff to happen. Like at the national level, the coalition government could still fall. The Free Democrats are getting crushed out of existence. They're part of the coalition. The Greens could hold their nose and say, well, if we don't have a veto anymore, we're going to collapse the government. But they won't do that either, because then they'll lose power. And if the SPD were to grow a spine and get backing by, I don't know, some very powerful Americans who say, oh, by the way, you work for us now again. You don't work for Brussels and Davos. Call for national elections. Collapse the government, and let's put it to the voters, and let's change Germany. It could happen. if the EU thinks that they're going to run the table, now I'm going to like broaden the conversation. If the EU thinks that they're going to help steal the election on behalf of Kamala Harris to destroy the United States and break us up, do you think that American business interests in Germany aren't going to activate their soft power and try and collapse the German government and force Germany and put Germany on a path to leave the EU? Oh, really? Like, oh, so who's zooming who here? Who's, when I listen to people talk about, who's actually running the show and Germany's a satrap of the United States and blah, blah, blah. And I hear all this stuff. I'm like, really? Then why is it that Angela Merkel literally destroyed the country and handed it to Brussels? Why did Helmut Kohl force them onto the euro without a vote? Why did these things happen? The only way you can say that is because the EU is an American project. No, it's not. And it's not at all, because it's never been in our best interest to create an antipode to the US dollar. What, are you kidding me? Not what it's become. It's insane to think that. No, not at all. So the German situation is a very interesting, pressure point, fulcrum on which a lot of things could happen. A lot of current status quo imbalance could fall apart. Same way with the UK gilt market, or Harris winning the election, or blah, or this or that, any number of things. So it's just another one of these pressure points. So you have to be aware of. And again, what's important about all of this is that you have to think strategically about the people whose oxes are being gored here. And once you realize that, you can you have a better sense of predicting what they're going to do. I could see this coming a mile away. I targeted these elections, last year, and the minute they started the scandals against AfD, starting back in February, and then they were like, "Oh, we're going to declare them a terrorist organization, and we're going to deplatform. We're going to take away their official party status because they're terrorists," and all this rotten nonsense. Are you kidding me? It was all done to suppress the vote totals just enough to get these results that they were looking for. And if if that didn't work, then they would fall back to more drastic measures. They didn't have to do that. So we'll see. But Brandenburg's going to be very interesting. But again, it's Germany's political morass is no different than the Americans' political morass. It takes time to turn that. It takes generations to change the perception about what our political system means for Germans or for Americans or whatnot. But the AfD vote totals for the younger generations were off the charts good. 37, 38, 40%. People this is German Zoomers are like, yeah, we're done with globalism. So, and then we see Olaf Scholz close the border. Is he getting ready to make a big move here? I would hope so, but we'll see.
Very fascinating breakdown, Tom. This has been a fantastic conversation as well. Always love chatting with you. Definitely we need a follow-up, because there's always so many more questions that come to my mind after you give these epic answers. Before I do let you go, of course, tell us about the Gold, Goats, and Guns newsletter and podcast, what it is you do there, where people can find it.
Sure. You can find, goldgoatsandguns.com or tomluongo.me is where the blog is. And the blog, for the most part, is just whatever I write publicly goes or produce publicly goes there. There's a link for the Patreon. The Patreon is a two-tiered service. We do twice weekly podcasts where I talk over slides and whatnot. I call them the market reports. I do those for the people on Wednesdays and Sundays. We look over, do technical reads of very important markets. I rarely ever do technical analysis in these talks, but I'll put my ability to read a chart up against anybody's in the world, and I do a very good job of it. And I try and marry all these things and I do those because this is how I stay up to date on all these little things, right? These little aspects of the story. So when you constantly talk about these things that way, and you're constantly looking for things to talk about, all of a sudden you got to prep material on a regular basis. So those are very good. And then the investment newsletter, kind of a classic, monthly. Hey, we've got a portfolio, and we do. But Dexter White and I do. It's like 12 pages long. It's all original material, and we're constantly looking ahead. Dexter writes articles that if it could be today, he'd write an article today that will reverberate 2 years from now. And you're like, oh, he was right about that. And we can go back and look at almost every article that he's written for the newsletter over the last 3 years and just be like, regularly we're amazed by how well a lot of these things come to pass. And again, personnel is policy. If you understand the people and you understand their motivations and you understand some history, a lot of this stuff becomes pretty easy to figure out, honestly. So, but it also means that there's a huge maintenance on that as well. And then, of course, we have a private discussion server where everybody gets together and jots ideas down and throws stuff into the mix that they saw and whatnot. And so we have a really great community at this point. It's a large community. It's a big community that, feels, almost inspired to throw good information my way to help me sift through, separate the wheat from the chaff, and then stay up to date on what's going on. I couldn't do it without them, to be honest with you. Couldn't do what I do without them. There's no me without them. So they're phenomenal.
Awesome. Well, I'll put links in the description below to the Gold, Goats, and Guns newsletter as well as your Patreon. I never miss a single writing of your blog. It's super fascinating. You dive into a lot of the things we discussed today in greater detail, and it always takes a really unique angle. So very much appreciate that and recommend people check it out. And thanks once again. We'll definitely do this again, get an update, and dive deeper down the rabbit hole.
No, I didn't mean to hog the microphone. I figured we were going to go longer today than 45 minutes, but that's fine. Like everything else, Jesse, thanks for the invite as always, and we'll do it again. And whenever you need it. So appreciate it. Have a great day.
Thank you for joining us today. As a reminder, this episode is brought to you by ARC, silver, gold, osmium for all your precious metals needs. Head to arcsgo.com and contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you, and I'll see you guys in the next episode.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.